We have reviewed them, and the panel have spent some time to review those questions and look up some answers for you, and we'll go from there. So we're going to go through these relatively quickly and allow them to answer, and then if you have questions, just raise your hand and we'll try to see if we can answer those today. So the first question, I will make a note, we sent out the questionnaire to all the auditors, and we did get some response, but we hope in the future that we'll get a little bit more response. I know there's a lot of questions out there. There's a lot of things that we send out emails, and that's great because we need answers on the spot. But if you have education questions, if you'd send those to the committee so that at least we're aware of some of those things, we can work on those for the future conferences. So the question number one was, has any county switched mental health providers? If so, what is the process? So Nick is going to address that.
Yeah, can we just pass that down? I have to hold it a minute.
Right, Zach. Nick, go ahead, and then we'll figure it out.
Can you hear me? All right, Allen County hasn't actually switched mental health providers, so I don't really have a lot of knowledge on this. We did have a bill in this year's legislative session that was we were trying to give the commissioners more authority over choosing mental health providers, but as an IC reference, I guess if somebody has switched, please raise your hand, and you would probably have a lot more information on it than I do. But as an IC, if you want to look at Title 12, specifically under Title 12, Article 29 goes into detail about how the commissioners are the ones that have to approve the financing even after you have selected a mental health provider. But way back at the beginning, the state Division of Mental Health and Addiction, they essentially certify those providers, as well as there's areas in which those providers can provide their services for mental health and addiction. So it's you're going to have multiple parties, one being your commissioners, as well as the state would have to certify the different agencies if you were to have more than one. But I know for sure the commissioners have to approve the financing of that. But again, that's Title 12. Two articles that you could look at to start with are 12-21 and 12-29 if you wanted a place to start. Unfortunately, I don't have a lot of, we haven't switched, and I know our bill failed. We're going to try it again next year to try to give the commissioners a little bit more authority in that regard instead of the state.
Okay. I was going to add a disclaimer. You know, every time we have conferences, they always have a disclaimer. So all of us want to add that disclaimer that we are not the authority and to please check the code sites. Dan just talked to us a little bit about how to look up those codes. It's vitally important that you know what you are answering or what you're telling the public is correct, or your council or your commissioners. The biggest piece of information that you have for validity is those code sites. So use them and make sure that you are properly applying them. So as a disclaimer, we're all in this together, and we're going to try to use as many code sites as we can, and we'll try to get those out to you on the website too. So with that, we'll go to question number 2. What are the legal responsibilities of the auditor regarding in the office providing human resources? That question is probably one that you need to talk to your county attorney. Probably a little bit more in-depth question than what we want to do today. So if it's something that we can find a good source on to present at a future education session, we will. The number 3 question is, what are the best tips for splits? Jennifer?
I'm not going to say that we have the best practices, but in our county, we always try to make sure that we have a really good map with a valid legal description with metes and bounds. We will not process a split unless it is accompanied by a new deed. We also have to make sure that the taxes are current. If they're not current, we politely tell the person bringing in the split deed, we can't process this until you go pay the taxes. And we prefer to have a survey map, but if it's lots, we will use our county GIS because they can just draw the line through the lot where they want to make the split at. And then if it's an actual acreage parcel and they don't want to have a survey done, then we do require them to give a printout of our GIS map that has the correct meets and bounds drawn on it, telling us how many feet, each direction to make sure that it's going to come out approximately where they're telling us that it is.
If you have questions while we're going through this, to follow up with anything, if you just raise your hand, I'll try to look for those, and we'll try to address those. Number 5. Number 4. Okay. How do you store deductions? 92 counties, I'm not sure how many different ways that we do that, but again, we're going to refer back. Find the code site. What is the code site on that? Do you do it alphabetical? Do you do it by unit? Are you doing it electronically? Are you doing it still with the paper files in your file cabinet? So there's many more components on that question that we'll have to look into. Number 5, can the association work on getting CPA accredited education sessions? So we're going to send that to the State Board of Accounts. That was one of the questions that was sent to us. Another question that was sent to us is nepotism policy enforcement. So I'm not sure on that question. If that was your question, again, we're going to refer you back to your local county attorney. The enforcement is the key word on that. So, Nick?
Well, a couple IC references if you want them. For the DLGF aspect of it, it's going to be IC 5-11-13-1.1. That's going to have to do with the budget aspect. And then IC 36-1-20.2-16, that outlines the penalty of perjury for the elected official if they haven't signed off on that. So just in case you want to look those up. I feel like State Board of Accounts up here just need a monotone.
Thank you. Okay, number 7 question was fringe benefits. How do counties handle this for IRS? Debbie?
Fringe benefits for our county are basically uniforms and take-home vehicles. And the publication that you need to reference is IRS Publication 15B. A good resource for me was I also reached out to a local tax expert just to make sure that when we determined what we would report for the fringe benefit for the take-home vehicle, that we chose the correct criteria. And then I took that to the county attorney and I had him review that criteria as well so that what fit our county and the take-home vehicles that should have fringe benefits reported, we used the correct one, and that was the to and from $3 a day is what we report for the fringe benefits. So you need to work with your county attorney. You need to get a policy. If you don't have one, you should work with your county attorney and your commissioners to get a policy in place on take-home vehicles. Now, the thing that I think folks in our county were somewhat confused about, because we did not have a vehicle policy and Warwick County was not reporting fringe benefits for take-home vehicles. Well, there can be very stiff fines by the IRS if you do not report fringe benefits. So it's not optional, it's the law. So you do want to make sure in your county that if you're not reporting fringe benefits via payroll, do it right away. Work with your commissioners and your county attorney and get something in place right away. And IRS law drives everything that you will do for reporting those fringe benefits. Are there any questions?
Has anybody had an IRS audit? Yeah. So there's several.
We have also. This was not, for us, it wasn't a result of the audit, but it was just a matter of saying, just because we've never done this does not mean it's correct. And that was the case prior to my administration. And so we took action. Now, that doesn't mean we could not be, audited later and have some finding, but hopefully there'll be no penalty because we've taken action to correct that.
So there were several hands that were raised on that question. If you have been audited by the IRS recently, raise your hands again and everybody can kind of look around and see. So there are several. Question number 8, is there an abatement checklist available?
Well, as we all know, county auditors play an important role in administrating tax abatements, and what we have found is that it's very important that we maintain complete and up-to-date files on all of the companies receiving an abatement, because in some cases, abatement deductions can result in a great deal of AV that would be deducted when we certify our overall net AVs. So just to go over some basics of the tax abatement process, tax abatements are governed by IC 6-1.1-12.1 and 50 IAC 10. Maybe the first step in establishing a tax abatement is up to the designating body, which would be maybe the county council or a city or a town council. They first have to establish what's called an ERA, an economic revitalization area, and then the taxpayers within the ERA have the opportunity to apply for an abatement. Keep in mind, land is not abated, and that certain assets are not eligible for an abatement. Generally speaking, one would be pollution control equipment, because those are already exempt. From the standpoint of county auditors, what we need to keep on file, some important forms that you should be aware of. One is called the Statement of Benefits. This is really up to the designating body to review, because the Statement of Benefits is the company's statement of what are they going to do, in a sense, in exchange for this tax abatement. In other words, how many jobs are they going to create. And then the form that we need to be aware of is called the compliance form, the compliance with the Statement of Benefits, or CF1. The CF1 real estate needs to be filed with our office and with the designating body by May 15th of every year, or if there's an approved extension date. This CF1 also needs to be filed with the local designating body, but the designating body has 45 days to determine if they're in compliance and to sign the form. But one thing in the law is that it says that the designating body may determine compliance. So even if they don't sign the CF1 form, we still need to have it in our files. And also, when we deal with real estate abatements, the companies need to file a Form 322 by May 10th. This is a one-time filing, which is like their application for the deduction. Also keep in mind that we need to publish, we county auditors must publish an annual legal notice of all of the abatements in our county, real and personal, and if you have any rehabilitated parcels. And some of us may have to deal with imposed fees or tax abatement fees, and that's why it's very important that in your files for the tax abatements that you make sure that you get that resolution that was passed, because in the body of the resolution there could be some details about the abatement that you need to know before you actually apply it. One example that we had was that one company was, per the resolution, buried deep inside the document was a limit on how much the deduction could go, or how much the equipment had to cost before we even applied the deduction. So in closing, I would just say to please use the DLGF as a resource. They have materials on their webpage all about abatements, and it's a great resource.
Okay, thank you. So the question number 9 is, this is a good one. What is the actual role of the auditor at a commissioners meeting or a council meeting? Gail?
Okay. The actual role of the auditor is that you have to be the clerk at or the secretary of the commissioners and the council. Now, I know in our auditor's manual, it will state out that we have to publish and we have to put together the agenda, but some of the counties that have administrative assistants to the to the commissioners, they will do the publication of their meetings and they will do the calendar and they will collect the documents that need to be passed out to them. As the auditor, we need to set the meetings for the council, publish their minutes and put together their packets for all their resolutions or all their documentation. Now, if you have a redevelopment board, a county redevelopment board, it says that we have to take the minutes for that board also. Some redevelopment boards, they hire their own minute taker, so that kind of lets us off the hook because we have to be the redevelopment board's treasurer also. And I was thinking I was
Gail?
forgetting one.
So even if another person is doing the minutes, is it still the auditor's responsibility, the office for public record, to have a record of those minutes in the auditor's office?
Yes. Yes. So all of the minutes then are a public record. They are in our office. I know we keep ours in books, but we also upload them to our county website. So if you have a county website, that could be one of your responsibilities also. So there's a lot of extra work that goes into taking care of these boards. You're kind of at their beck and call. Are there any other questions about that one?
Okay, another question that we received was, how do you find specific code sites? And Dan?
To recap my previous presentation on finding specific code sites, the quickest way is to go to the State Board of Accounts and look at that listing of code sites they have and those topics and categories. A lot of times you're going to find the question that you have listed there, or the subject that you're wanting to research listed there, and find the code site. There also at the Board of Accounts, the bulletins, using the bulletins to research a topic is a quick way to find information on that subject and also the specific code site. Then once you know the code site or the code number, then you would go to that General Assembly website and look under the Indiana code and look for the website using the drop downs for the title, article, and chapter, and then going to the specific section there. Questions?
Okay, next question is, what to expect in an audit? What is the procedure? So Debbie's going to address that for us.
Okay, how many of you have not been through an audit? Not too many of you. So, and I know we have some new auditors here who perhaps have not been through an audit. First of all, don't be afraid. That's what I would say, is don't be afraid. The first audit I went through was for 2014. It was the year prior, that was for the year prior to me taking office. They didn't make any advance calls or set up appointments or anything like that. They just came in unannounced. In 2015, they called a few days in advance and went ahead and set up our entrance interviews with the county commissioners and the council's representatives. Audits are extra work for the auditors, and they will take a great deal of your time and your staff's time collecting all of the data, and that's just part of it. They depend on us to have good records and to keep our additional appropriations in good order so that we can provide those. So if you're a new auditor or if you've never been through an audit, think about the way you keep the records in your office now, because it will make it easier for you later if you keep good records and stay organized with the information. They will request a transaction history report. In the case of my second audit, they did this in advance, so I just generated from the system and sent that to them so they could go ahead and start working on it. You'll be given assignments by the auditors, things like internal controls. You'll be filling out surveys and questionnaires around risk, points of collections in your county, areas that you have concerns about. It doesn't have to be just your office. You may have concerns about other areas in the county because you see everything in the auditor's office, and if something doesn't look right, you need to let them know. You're there to protect the taxpayers' money. So if you see an entity within your tax unit, within your county, that something just doesn't look right, it may not be. And helping the auditors by just pointing out your areas of concerns, it helps them to know where to spend their time and what to work on. They did me. Has everyone experienced that you get an opportunity prior to the start of the audit to restate your numbers? And that's good, because even after you've done your annual financial report, you may find an error that happened in the previous year. And you may find it by doing something this year. Well, what did I do last year? And you look back and you find an error. And so having that opportunity to restate your numbers, that's important. It's important for you to take the time to restate your numbers. Make sure they're exactly the numbers that you want audited. If something was receipted into an incorrect fund, then you can take that opportunity to restate. If you haven't already made those corrections, then work with them and let them know what those errors are.
So Debbie, all you have to do is email Gateway, and they can unlock that for you as long as it's not in an audited state with the State Board of Accounts. So you can do that at any time. Just email Gateway.
Good. Thank you for interjecting there. Auditors will review and observe your internal controls. So if you've had a finding in a previous year, and then you have explained what you will do to correct that, to get some internal controls in place, they will want to observe that. And what does that look like in your office? Sometimes, what I found was helpful was to have, I find that having standard operating procedures or help aids, whatever you want to call them in your office, but especially in your accounts payable processes, to know from beginning to end, before that, to the point that that check goes out the door or the ACH, you know every single step that claim goes through, and you can explain that and you can demonstrate it, and it's wise to even have it in writing so that they know that you understand what an internal control is, and to have internal controls around your processes. And then prior to the exit interview, They'll have you obtain representation letters from your commissioner's attorney, your council's attorney. You'll help them coordinate an exit interview. And then now, by law, all commissioners and all council can attend the exit audits. So you may have some that kind of want to control, and one or two, and they say, no, not everyone can attend, but they can. And they should. And I really promoted that with the commissioners and the council. It's important for them to share in the ownership of the finances for the county.
And it is the exception for the advertising rule as well.
Exactly.
You do not have to
It's
advertise
not considered
that.
a meeting.
It's an exception.
Right. There's no decision-making in the meeting. Any questions? I will tell you that, I'm sorry. Can you hear her?
It does not have to be advertised. It's the exception.
Right. No,
You
it
can
does
ha-
not.
Yeah.
And we just finished our 2015 audit. So that was the first time we'd experienced that with as many council members and commissioners who wanted to attend. All of our commissioners attended, and 2 of our council members attended.
And they will go through that with you at the entrance part, giving you the information. It's new legislation where it doesn't have to be advertised and they can all attend, so. Anybody else? There's a question back there.
Yes.
Yes, we just had a 2-year audit in our county.
That is different that's different from one county to the next. And what
That's in the State Board of
determines
Accounts.
the frequency of your audit is the amount of federal funding that you receive in your county. We receive over $500,000 in federal funding, so we are required to be audited annually. And I know that some of you have 2 years at a time. So that's what really drives the frequency of your audits.
We are federally audited as well, but State Board of Accounts are behind on the audits and they're trying to catch up. So we just had 14 and 15 audited, so.
10 years together.
Okay.
Oh, well. Okay, any other questions? All right.
Okay, the next question. Is there a checklist for transferring deeds or other documents? Jennifer? You skipped Nick. I skipped Nick. Number 13. I'll go back to Nick.
Oh, Nick.
Can you help explain which funds are to be budgeted?
I'm going to approach this from 2 different angles. One, because to be budgeted, that's pretty broad. First, I would look at it from the appropriation standpoint. I take the general rule of thumb that everything should be appropriated unless law or Indiana code states otherwise. I hesitate to use this, but April 2010, State Board of Accounts has a bulletin from April 2010 that has some examples in there of what should and shouldn't be appropriated. Looking at Indiana code, specifically IC 36-2-5-2, subsection B, it reads verbatim, the county fiscal body shall appropriate money to be paid out of the county treasury, and money may be paid out of the treasury only under an appropriation made by the fiscal body, except as otherwise provided by law. So then again, it goes back to unless the statute states otherwise, and again, I take the rule of thumb it should be appropriated. Additionally, State Board of Accounts has on their website, as we've all seen, a list of funds with the internal Indiana code reference next to it, so in case you needed that. On the budgeting aspect, at least in Allen County, I think it's a good practice to budget everything. Our county council, and what I mean by that is to go through a budgeting process with those funds, and our county council actually forces the department to do this. They send out if we call it a pre-allocation questionnaire, and it asks them about their special funds, if you want to call them, and requires them to list what the balance was, what they anticipate coming in, so that they go through a budget practice. I think it's a good idea to do it. I think it's a best practice to do it, one, so you can see what are these departments potentially sitting on if you're not already paying attention to it. If they're sitting on a sizable balance, what can it be used for? can you force them to use it for these operations, for these things, to give the general fund some leeway, or your LIP funds, or whatever fund it may be, and then if those balances are spent down, then possibly they can come back to the general fund. But I really think that you should be doing, as an auditor, going through a budget process. Just because it doesn't have to be appropriated doesn't mean you can't look at the fund and go through and see the history as well as what you budget going forward, so that you are giving, the best use of the tax dollar. If you don't need to tax them because you're sitting on $50 million of special revenue funds, you should probably not go down that route. But again, that's my opinion, thought on the budgeting aspect of it. But appropriation, again, I take the general rule of thumb that always default to appropriating and then see, or do the research and see if you don't have to appropriate it.
There's a question? You're going to have to speak a little louder.
We actually had a situation like that just recently. The office holder went to the council for an additional appropriation. Does anybody else have an experience like that? They're consulting one another up here.
Can you say out loud for everyone for the question what you heard?
Okay, let's make sure we heard what you said. There was a bill that should have been paid before the end of the year, and it was not budgeted for, appropriated for in this current year, but the bill had to be paid. Okay. I would go to the council and ask the office holder, whoever the current office holder is, should go to the council and explain the situation. They appropriated for it last year. If there was a contract or an invoice, whatever, obviously there was, it could easily have been encumbered forward and paid. But since that didn't happen, the council can appropriate for it.
Does that answer your question? We're having a little bit hard time hearing that question, so you want to follow up with us on?
In this case, the invoice did not come in. The stuff was purchased, there was a receipt, but it also follows up with an invoice. The invoice got mailed to the wrong place, and the person didn't pay the bill because there was no bill to pay. But the services were, the money. And in our county, if you don't have an invoice, you can't ask for an encumbrance through January. I don't know how it is in your counties, but that's just kind of our general rule. But everybody knows it was a bill. So I have no problem going back to the county council and, assisting this person. I was just wondering, has anybody ever taken it out of an unappropriated and wrote a note on there, this was the appropriation, this is why it was taken out of unappropriated, and so that was my question.
No, I would just say still go appropriate it.
It'd be a pretty easy appropriation process, I would think, if it was already been appropriated at one time, and once the situation was explained, should go through relatively easy. Okay. Jennifer? Is there a checklist for transferring deeds or other documents?
Clay County had created our own checklist, and Davies County also had one, so I kind of combined the two. It's got 12 points on it, and I'm not going to read all these to you, but I will be emailing it out. Either Patty will help me get it out to everybody, or we'll make sure that it does get out. But I do want to point out the one thing that we incorporated in 2009 was by Indiana Code 36-2-9-18D, and that was to change the transferring fee from $5 per deed to $5 per parcel. I don't know how many of you have adopted that practice yet or not, but it made a huge difference in our county. And I would strongly urge you to go ahead and adopt that policy if you have not already. And I think Debbie has something to say.
Yeah, because I just went through this with our county. We have in our county a resolution citing this IC code from 2006. What happened in our county was the deed transfer fee went from $1 per transfer to $5. However, they never implemented the practice of charging $5 per legal description, per parcel. And I'm not here to say you're doing something wrong, but I really feel so passionate about this that you should be charging $5 per legal description if you are not. And we were not in our county. And I've even heard some say, well, you know, it could cause a lot of problems or whatever in our county if we did. Since 2006, that's almost, well, that's 10 years. And we have Alcoa in our county, we have coal mines, and they are transferring for $5 only, sometimes 100 legal descriptions. That means the homeowner who sells their home and pays $5 to transfer one legal description is bearing far more of the burden for the resources in our office than a company who transfers 100 legals for $5. And also, that's money in your plat book fund that you can use and defend if you used it for electronic preservation of your records. So imagine, our county is growing by leaps and bounds. It just blows my mind to think about what that could have looked like over 10 years had we been charging $5 per legal description versus $5 for a transfer.
Question.
If you have a resolution citing this IC code that Jennifer gave you, that's it, because the IC says per legal description. So I did not have to go back to our council for a resolution because that resolution was passed in 2006. And I didn't look back to find out, you know, if that was the purpose, if that was why the auditor went, probably because it said $5 for a deed transfer and they were only charging one. So they got the resolution, but they only charged per deed transfer rather than per legal description for each deed. Have I confused you all? It's okay if you're not charging $5 per legal description, but what I'm saying to you is you should. Because you have to pay for the resources in your office. It took almost 3 months last summer for us to verify every single legal description that was in that deed that we received from Alcoa that contained over 100 legal descriptions. We worked on it off and on all summer long. We still had other deeds to transfer, but we charged $5 only for that deed. And I just felt that that was so unfair to the other taxpayers who came in and paid $5 to transfer one parcel. So you're not really doing anyone a disservice, because your average taxpayers are all your homeowners, single parcel owners. That's where, you know, the bulk of your revenue comes from in tax collections. It's not the large corporations that will put 100 legals in one deed and transfer it.
Any other questions, comments? Our next question is in regards to grants, and the question was specifically for EMA grants and the match money for the director's salary. The question was, can I deposit it to a general fund, or does it have to go into a grant fund? Gail?
Okay, as part of your internal controls, you have a grant procedure that's signed off on by the commissioners and council. So you have every grant in a folder in your office. Well, when you read through the EMA grant, it is reimbursable. So that means you're going to be paying those salaries out of the general fund. So when it is reimbursed, it's reimbursed back to your general fund. Now, the one thing I noticed, you said EMA grant director's salary, but those grants, if they are allowed in their grant to pay to ask for reimbursement of 50% of the director, the assistant director, you're only helping yourself out, so be sure to read that grant. But yes, it would go back into your general fund, because that is where your salaries originate from.
All right. Number 17 is in regards to some information on CVET and FIT distribution, and the question is, are we doing it correctly? So I'm going to let Dan address that.
Though this question's a little bit open-ended, but I first want to say that CVET and FIT distribution certainly can't, for those new auditors, you cannot use your property tax distribution system to calculate the distribution of these funds, because the calculation for those distributions are completely different. It's the allocations are to a taxing unit, not to a taxing district, and you use only the rates that are applicable to that taxing unit. Where I think this question is coming from has to do with the distributions to townships and the allocations and to the township funds, because with CVET, for most townships, there are two amounts for each township, a civil amount and a fire amount, and the township funds are categorized into either a civil fund or a fire fund, and the fire funds are the funds that are related to the fire operations, be the fire fund, the CUME fire, and fire equipment debt, and so forth, the various different funds they may have for fire. All the other funds of a township, such as the general, the township assistance, those are categorized as a civil fund. And so the amount that's labeled civil, that for a township is only distributed to the township funds that are considered the civil funds, and the amount that's labeled fire is only distributed to the funds that are considered fire funds. The other potential problem with the distribution of CVET and FIT has to do with fire territories. In those taxing districts where you have a fire territory, the rate that is for the fire territory will be considered for a township part of the fire fund, or will be the fire amount for the township will be allocated to the fire territory. Also, if you have a fire territory fund or rate that is associated with a town or a city, then when you're distributing the money to the city or town, you will also be using and including the fire territory rates in that distribution for that city or town. Hopefully that helps. If you have questions later, you can let me know. I have a couple worksheets that we use in calculating our distributions of CVET and FIT that I'd be happy to share with you. We do not have a fire territory in my county, but I would be happy to discuss that fire territories because it can get very confusing.
I might add that this was something that our field representative, DLGF field rep, did comment that there are a lot of errors in this practice. So something that we need to look at. And it may be something that you think you're doing correctly. Just go back and re-verify with your field rep. They'll go through it, educate you. Perhaps there's one small part that you didn't quite understand. So, next question is regarding salary ordinances. What are the requirements regarding any changes made to the salary ordinance? Does it have to be re-advertised? Gail?
36-2-5-3 tells you that the salary ordinance fixes the numbers, the classifications, and it adopts the compensation. So if you make a change to that, you would re-advertise it and you would take it back to your council. Now what I do is I highlight those changes for council so that they can have discussion. But I do take that back to the meeting, and I never pay a different amount on the salary ordinance until it has gone back to council. And if we have an office holder that maybe wanted to change the compensation earlier, maybe 2-3 weeks earlier, they need to ask, at least in my county, they need to ask council to go back retroactive. But you always want to follow your salary ordinance when you're doing payroll.
The next question is regarding advance draws. What is the best practice, or what are some helpful tips? Dan?
With advanced draws, the key here is communications with your taxing units. If you're receiving a request for advanced draw very early on in the year, and you know, at a time when you are not collecting taxes or very few dollars in taxes have been collected, and I would communicate back to the taxing units that there really isn't anything to speak of to advance, and hopefully you will have reasonable officials involved with that taxing unit so that you're not wasting your time determining an amount to advance to a taxing unit that's really not of any significant amount, and coordinate with the taxing units when they would expect to, or you would expect to have sufficient dollars collected that would make an advance to be meaningful. I know in my experience in the past is that I was able to communicate with the school officials to let them know that receiving an advance draw request in February, there isn't going to be much of any money to distribute, and I would communicate to them that, by mid-April to the latter part of April, we're going to have dollars that will be meaningful, and, can we just wait to advance then? And typically they'll work with you, and did work with me, and then addressing their request for that time period. We actually have got to the point with our school units that we are automatically advancing money to them like 2 days after the tax due deadline, and that keeps them satisfied and gets them out of our way that we can go on to do that. As far as the mechanics of an advance draw, you treat it just like a mini settlement. You will receive from the treasurer the amount of taxes that have been collected for the applicable taxing districts, and then you will use those dollars and you will determine in your best judgment the percentage you're going to advance, typically 95 to 90% of those dollars, and then you'll run it through your tax system as a calculation for the advance. Questions?
Okay, the next question is, what forms and when do we use those forms regarding veterans deductions?
Okay, for those of you who don't know, the DLGF has what I consider to be a really, really good summary sheet. It's called State Form 51781, and it is available online. And this is it's like a gold or a yellow form. We have copies of this in our office to give to taxpayers, and it gives a summary of all of the available deductions. Now, with respect to the veterans deductions, this is a topic that's really near and dear to my heart, but I have to say, I feel that the two main veterans deductions, the ones for the disabled veterans, have caused a great deal of confusion, not just among the general public, but also among the deputies in our office. And I think part of this confusion is because of the names that have been given to these deductions. One is called the totally disabled veteran deduction / over 62 with a partial disability, and then the other one has been called the partially disabled deduction. It is now being called, I think, more commonly as the service-connected disability deduction. So veterans can receive both of these deductions or just one of them. And some of the questions that I've heard, or some of the comments I've heard, is how can veterans receive both of these? You're either totally disabled or you're partially disabled. Another attitude has been, or another viewpoint has been, if you're totally disabled, aren't you also partially disabled? And I think that this kind of thinking is because of the titles that have been given to the deductions. So to try to help clarify the confusion, we've tried to really educate both the public and our staff on it. We created a checklist for the two different types of veterans deductions and encourage everyone to realize that these are two separate deductions. And even though they might have similar wording in the titles, they have different criteria. And you have to meet these criteria in order to receive one or both of the deductions. We also address the recent issue involving when to use the affidavit. This generated some discussion in the auditor emails recently that basically the affidavit needs to be signed and notarized, signed by the auditor, and it has to be notarized and given to the BMV when a veteran does not own property or does not own property that qualifies for the deductions. And that the use of the affidavits have also caused some confusion. And on the opposite side of this checklist, we're kind of proud of what we developed. We came up with a flow chart to help the people in our office better understand the different criteria and when you're eligible for one or both or neither, as the case may be.
Thank you. For the sake of time, because I know we're going to wrap up here, there was just a couple other questions. One is in particular regarding the procurement policy. Have a question? Okay. Vicki? The question was if she would share her chart, so we'll ask her.
I did bring some copies of this, the checklist that we developed in-house along with the flow chart. And if you're interested, I can give you a copy of it. And the Indiana Property Tax Benefits form is available on the DLGF's website. And it has been updated with the new criteria for the one of the veterans deductions that changes the AV requirement.
And Vicky's been doing an update on our website. If you've recently visited that site, you'll see that she's working hard to get everything up to date on that. So possibly it's something we could put out there available. So we'll work on that on the Education Committee side. Did you have something, Dan? Okay, so for the matter of time, I'm going to touch a couple things and then we'll go ahead and finish so you can enjoy the rest of the evening. Your one question was regarding the procurement policy. That's going to be probably a little bit more in-depth than what we want to get to today, so that's something the Education Committee will look at and try to get some information out on that. There was also a few others that we received questions on that we didn't get to address all of them today, so we will work on that for future. Just want to remind you that all these questions today were your questions, and they were answered by some of your peers. So remember that one of our best tools is each other. So I'm going to leave you today with use this week at conference to utilize each other and to network, ask questions, see how other counties are, what operating practices they have in their counties. You'll find maybe a few tips for yourself. Education Committee is open to any of your questions and suggestions as we move forward to try to educate our association members. And right now, in regards to mentoring, if you're a seasoned auditor, or if you have a field of expertise or a passion of information like a few of these stated today, would you please step up and share that information with the Education Committee, share it with your fellow auditors. So if there's not any other questions right now, I just want to thank the panel, each one of them. And WTH has kindly given us these little tools here for the panel members today, taking the extra time to help us all out. So inside here is little tools to use, stick it in your pocket or glove box. So I just want to say personally thank you. And to the rest of you, enjoy the evening, and we'll see you bright and early tomorrow morning.